All right, so today we're diving into options trading.
Sounds exciting.
It is. We've got this set of recommendations. It's like someone's actual playbook. But first,
Right, we gotta...
got to set the stage a little bit.
Absolutely. Options trading can seem intimidating, but honestly, once you get it, you get a real feel for like market psychology.
Okay, so decode that a little bit for me.
Yeah.
We've got this list of companies here: SPY, AMZN, AAPL, INTC, NKE, ORCL, TSLA, WFC, TGT, AMD. Quite a mix.
Yeah, a lot of variety there.
For each one, there's an options play. Now, I'm hoping you listening at home, calls and puts, like the basics.
Right.
But
At least the basics.
let's take it a step further.
Yeah, imagine our traders building a portfolio here. Maybe looking for steady income, or maybe they're going for, aggressive growth. Each trade is like a piece of that puzzle.
Okay, I like that. So let's start with Apple. Always a fun one.
Interesting. So they're using those price points as triggers. It's classic technical analysis.
Yeah.
Not just betting on Apple going up, but like on it moving a specific way in a short time.
But wouldn't that mean Apple needs to be kind of predictable? I mean, it's not really known for going crazy.
You got it. Which maybe tells us they think there's something coming, maybe a new product, or a good earnings report, something to get things moving.
Okay, makes sense. Now let's look at something a little wilder, Tesla. Here, the recommendations are much more dramatic. Puts targeting $390 if it falls below $490.80, but calls all the way up at $500 if it jumps above $407.95.
Yeah, that's interesting. We're not just talking different directions, but totally different futures for Tesla. Is this hedging, or do they think it could both boom and bust?
So basically, yacht shopping or selling the car next week, depending on Tesla.
Haha, something like that.
Yeah.
It really shows you how risky options can be, especially with a stock like Tesla.
All right, one last example before we try to put it all together. Target stands out here because they're recommending calls that expire way out in March 2025. This isn't a quick flip. This is like a bet on Target's future.
Absolutely. This is about different timelines for investing. Some people chase those quick wins, others play the long game, slow and steady.
So less about the charts, more about just believing in Target.
Right. They're basically saying Target's going to be worth a lot more in 2 years, no matter what happens short term.
Okay, so we've seen calls, puts, quick plays, long plays. What's the message here? What's this trader telling us about the market through all this?
That is the million-dollar question, isn't it? It seems all over the place, but look closer. There's a pattern.
Okay, I'm all ears. What connects these seemingly random trades?
Well, if we zoom out and look at the whole portfolio, it's kind of cautiously optimistic, mix of bullish and bearish, but those long-term plays like the target calls, they hint at a belief in like eventual growth.
So not sell everything.
Yeah.
More like strategically ready for whatever happens.
Exactly. And that brings us to another level here. The stuff that could actually make or break these trades, because even the smartest analysis can be wrong if the information's bad, right?
Makes sense. All right, unpack that for me. What kind of news or events could send this trader's predictions either soaring or crashing?
Well, for one, earnings season is kicking off. Apple, Amazon, Tesla, Target, they'll all be reporting their numbers soon. And those reports, they can totally change how the market feels.
Earnings reports. Those are like the company's financial checkups, right? Showing if they're meeting their goals.
Exactly. And it's not just the raw numbers, it's what they say about the future. Like if Apple hints at some revolutionary new gadget, their stock could go through the roof, making those bullish calls look really good.
But what if, say, Amazon says their growth is slowing down? That could scare investors and maybe push them toward those puts the trader recommended, right?
Exactly. And it's not just company news we got to think about. We need to zoom out even further and look at the whole economic landscape.
Okay, big picture time. Interest rates, inflation, all that jazz.
Right. Remember those target calls expiring in 2025? That's a bet on the U.S. economy's long-term health. If we see signs of a recession, people will probably cut back on spending, and that hurts companies like Target.
So even though those calls are years away, what's happening with the economy right now could determine if they pay off or not.
Exactly. And then there's always the wild card global events. A sudden international crisis could really shake up the markets, messing up even the best laid plans.
So this trader isn't just staring at charts and numbers. They're also checking the news, getting a sense of the market's mood.
Absolutely. Successful trading takes both analytical chops, A&D, and awareness of the big picture. And speaking of awareness, let's go back to that Tesla trade. That potential swing from $390 to $500 is wild.
Yeah, it's like they're saying, I have no idea what Tesla's going to do, so I'm ready for anything.
Well, Tesla's a unique beast, It's not just a company, it's a whole phenomenon. Elon Musk's tweets, the crazy fans, all the rumors about new tech, it all adds to the volatility.
So it's not just about the money with Tesla. It's about the story, the hype, I don't know, the cult following.
Exactly. It shows how investor psychology can drive the stock price. Sometimes it even overshadows the actual financial fundamentals.
Which means those extreme Tesla predictions, they're less about precise calculations and more about, well, accepting the chaos.
Exactly. You can analyze Tesla's books all day long, but the stock often moves on feelings and expectations.
Okay, so we've got earnings reports, economic indicators, global events, and the whole market's mood all swirling around these trades. How can anyone even make sense of all this?
That's the challenge and the beauty of trading, right? It's about weaving together data and gut feeling, finding that sweet spot between numbers and intuition.
Sounds like you need to be part economist, part psychologist, maybe even a little bit psychic.
Haha, maybe. But the main thing is you got to realize that markets are driven by both rational, irrational stuff. And the best traders, they're the ones who can handle that complexity.
Okay, so back to our mysterious trader. We've peeked at their strategy, we've seen the bigger picture, but we're still missing something, the HOW. These are options recommendations, but what's the thought process behind them?
That's where the real meat of this deep dive lies. We've tackled the what and the why. Now it's time for the how, the actual strategies they're using.
All right, let's crack open that options playbook then. What tricks are they using to manage risk, maybe make some income, and hopefully profit from all this market madness?
Well, let's save that for the grand finale, shall we? In part 3, we'll really break down how these trades work and show you the thought behind these seemingly simple recommendations. So if we kind of step back and look at everything together, it leans, cautiously optimistic. There's that mix, right? Bullish and bearish. But those long plays, like the target ones, they're kind of saying, hey, I think the market's going to grow eventually.
Okay, so this isn't sell everything. It's more like being ready for anything.
Exactly. And that brings us to something we haven't really touched on. What could actually make these trades go boom or bust? Because even the best analysis, it's only as good as the info it's based on.
Right, makes sense. So walk me through that. What kind of news could make this trader look like a genius? Or, well, not so much.
Well, first off, earnings season is upon us. Apple, Amazon, Tesla, Target, they'll all be reporting soon. And those reports, they can really swing the whole market mood.
Earnings reports, those are like the company's report cards, right? Showing how well they did.
Exactly. It's not just the numbers, though. It's also what they say about the future. Like if Apple hints at some crazy new product, their stock could explode, right? Suddenly, those bullish calls are looking really smart.
But if, say, Amazon says, oh, our growth is slowing down, that could spook people, right? Push them toward those puts that were recommended.
Exactly. And we can't forget about the bigger picture. We got to zoom out, look at the whole economy.
Oh, big picture time. Interest rates, inflation, the whole 9 yards.
Precisely. Those target calls, remember, they're way out in 2025. That's a bet on the long haul, on the U.S. economy doing well. But if we start seeing a recession, people tighten their belts, and companies like Target, they feel it.
So even though those calls are years away, what happens with the economy right now matters a lot.
Yeah, big time. And of course, there's always that wild card. What's happening in the world? You get some big international crisis, the market freaks out, and suddenly even the smartest plans go out the window.
So this trader isn't just looking at charts, they're reading the news, taking the temperature of the whole market, basically.
Absolutely. Good trading, it's not just about the numbers, it's about understanding the context, the whole picture. Speaking of, let's circle back to that Tesla trade. That potential swing from $390 to $500, that's insane.
Yeah, it's almost like, look, I don't know what Tesla's going to do, so I'm just covering all my bases.
Well, Tesla's a different animal, right? It's not just a company, it's this whole dot phenomenon. You got Elon Musk tweeting, the hardcore fans, all the rumors. That all adds up to a lot of volatility.
So it's not just about how much money Tesla's making, it's about the story, the hype, the dot cult of personality almost.
You got it. Investor psychology, it can move the stock price more than the actual fundamentals sometimes.
Which makes those crazy Tesla predictions less about being right and more about accepting that Tesla's just unpredictable.
Exactly. You can analyze their balance sheets till you're blue in the face, but emotions drive that stock more often than not.
Okay, so we've got company reports, economic indicators, global events, the whole market's mood. It's a lot to juggle. How do you even start to make sense of all that?
That's the challenge, right? And also kind of the art of trading. You need that data, the analysis, but you also need a feel for things and intuition.
Sounds like you got to be part economist, part psychologist, and maybe part mind reader too.
Uh-huh. Maybe a little bit. But the point is, markets are driven by both logic and emotion. And the best traders, they get that, they can handle that.
Okay, so back to our mystery trader. We see their plays, we kind of see the world through their eyes. We're still missing the HW. We see the what, but how are they actually doing this? What are the mechanics?
That's the next level of this whole deep dive. We did the what, the why, now it's time for the how, the actual nuts and bolts of these trades.
Okay, time to open up that playbook, I guess. What tricks are they using to manage risk, maybe make some income along the way, and hopefully come out ahead in all this craziness?
Let's save that for the grand finale, shall we? Part 3 will unpack exactly how these trades work and maybe reveal just how clever this seemingly simple strategy really is.
All right, we're back for the final part of our options trading deep dive. We've got the traders' recommendations. We got to get their view on the market. And we know what could make or break these trades. Now, it's time to get into the nitty-gritty, the actual strategies they're using.
This is where options get really cool. It's not just up or down, it's way more nuanced. You can really tailor your approach, manage the risk, and get the most bang for your buck depending on, how you see things playing out.
So less about predicting the future, more about having a good plan.
Exactly. Like, take those Apple calls, right? Quick profit if it pops above $244.15. This trader might be using something called a bull call spread.
Bull call spread. That sounds a lot fancier than just buying a regular call option.
It is, and that's the point. Instead of just one call, they're buying one at a lower price and selling another at a higher price.
Kind of creates a profit zone,